Tomorrow morning on June 12th, the biggest company you've never been able to own is going to start trading on the stock market. And the moment it does, something strange is going to happen behind the scenes. Some of the largest investment funds in the world are going to be forced to buy billions of dollars of this stock. Not because they want to, not because they think it's a good deal, but because they have no choice. This is the part of the SpaceX story almost nobody is explaining. And by the end of this video, you'll understand a hidden mechanic of the stock market that most people never even know exists. Let's get into it. First, let's be clear about the scale of what's happening, because the numbers are genuinely hard to believe. SpaceX is going public on the NASDAQ under the ticker SPCX at a fixed price of $135 per share. That values the company at roughly $1.75 trillion. To put that in plain terms, this is the largest initial public offering in the history of financial markets. The previous record was held by Saudi Aramco, the oil giant, which raised about $29 billion when it went public back in 2019. SpaceX is aiming to raise around $75 billion. That's not a small step beyond the old record. It's more than 2.5 times bigger. We have simply never seen a company come to market at this size. So what exactly are you buying if you buy a share of SpaceX? Because this isn't just a rocket company anymore. Earlier this year, in February, SpaceX merged with Elon Musk's artificial intelligence company, xAI, the maker of the Grok chatbot. That means the business going public now wraps 3 things into one. You've got the rocket program itself, which launches more rockets every year than the rest of the world combined. You've got Starlink, the satellite internet service that now has more than 9 million subscribers around the planet. And you've got a frontier AI company bolted on top. In 2025, this combined business pulled in around $18.7 billion in revenue, which was up 33% from the year before. By any measure, it's growing fast. But here's where the story gets complicated, and where I want you to be careful before you get swept up in the hype. Because despite all that growth, the company is not actually making money. In 2025, SpaceX reported a net loss of around $4.9 billion. Read that again. Almost $5 billion in losses. In the same year, it's going public at a $1.75 trillion valuation. The year before, it had actually turned a small profit. Now it's deep in the red, because building rockets and launching satellites and training AI models all cost enormous amounts of money up front. And this is why some serious voices on Wall Street are quietly raising their hands and saying, wait a minute. The research firm Morningstar looked at this offering and called it, in plain language, significantly overvalued. When you do the math, that $1.75 trillion price tag works out to roughly 95 times the company's annual sales. For comparison, most large established companies trade at a tiny fraction of that. So the skeptics are asking a fair question. Are you buying a piece of the future, or are you paying a future price today and hoping reality eventually catches up? History offers a sobering note here. Studies of past IPOs found that while new stocks often pop on their first day, the average 3-year return for IPOs over the last decade was actually quite modest. The opening day excitement and the long-term payoff are 2 very different things. Now, with all of that on the table, let's come back to the strange mechanic I promised you at the start. The thing that makes this IPO genuinely different from almost any other. To understand it, you need to understand how a huge amount of money moves through the stock market today. Trillions of dollars are not actively managed by humans picking stocks. Instead, that money sits in what are called index funds. An index fund is simple. It doesn't try to be clever. It just owns every company in a particular list, in proportion to their size. One of the most famous lists is the NASDAQ 100, which tracks the 100 largest non-financial companies on the NASDAQ. If you've ever heard of the fund called QQQ, that's one that follows this exact list. Millions of ordinary people have their retirement savings parked in funds like it. Here's the key part. When a company is added to one of these major indexes, every single fund that tracks that index is required to go out and buy that stock. They don't get a vote. They don't get to decide whether they like the company or the price. The rules say the stock is now in the index, so they must own it in the right amount to keep matching the list. And SpaceX, because of its enormous size, is reportedly being fast-tracked into the NASDAQ 100 shortly after it starts trading. NASDAQ is said to have adjusted its usual rules to allow this to happen quickly rather than making the company wait the typical seasoning period. So think about what that sets up. The moment SpaceX officially joins that index, expected just a couple of weeks after the listing, every index fund on Earth that tracks the NASDAQ 100 has to buy it, all at roughly the same time. Analysts estimate this forced buying could amount to somewhere in the range of $22 to $27 billion. Billions of dollars of demand, appearing not because investors studied the company and decided it was a great deal, but purely because of a mechanical rule. That is the hidden engine underneath this IPO. It's a wave of buying that is, in a sense, automatic. And it's the reason so many big institutional investors are positioning themselves right now, ahead of that moment, trying to get in before the forced wave arrives. There's one more piece to this story that I think is genuinely remarkable, and it's about the people inside the company. SpaceX has set aside an unusually large slice of this offering for everyday retail investors, roughly 30% of the deal, which is around 3 times what a normal IPO offers to the general public. But the more striking number is about the employees. Estimates suggest this single event could create around 4,000 brand new millionaires overnight. And not just the executives and the star engineers. We're talking about people up and down the company who received small amounts of stock over years of working there. Technicians, junior staff, even, reportedly, some of the cafeteria workers who were given equity. People who showed up to a job and quietly held onto their shares, who will wake up tomorrow with their lives financially changed. That is the very human side of a number this large. So let's bring it all together, and let's talk about what this actually means for you, if you're just a regular person watching this unfold. First, understand that the hype and the fundamentals are pulling in opposite directions here. On one side, you have a genuinely dominant company, real revenue, real growth, and a forced wave of index buying that could push the price up in the short term. On the other side, you have a company losing billions of dollars, a valuation that respected analysts are openly calling too high, and a long history showing that the first day of trading and the third year of trading often tell completely different stories. Both of those things are true at the same time. The excitement is real, and the risk is real. Second, if you ever find yourself wondering why a stock suddenly jumps for no obvious reason, remember what you learned today. Sometimes it isn't about the company at all. Sometimes it's just the plumbing of the market, the index funds, quietly doing what the rules force them to do. Understanding that one idea puts you ahead of most casual investors who only ever see the price move and never ask why. SpaceX going public is a genuine moment in financial history. The largest offering ever, a company reshaping space, the internet, and artificial intelligence all at once, and a hidden mechanic that will move billions of dollars on autopilot. Whether it turns out to be one of the great investments of the decade or a cautionary tale about paying too much, too early, is something only time will answer. But now, at least, you understand what's really happening beneath the headlines. If this helped you see the story more clearly, consider subscribing, because we break down the trends moving money in markets calmly and without the hype. Thanks for watching, and I'll see you in the next one.